To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Hi friends, so let's look at the RTP for May 2023. Now, the first question that they have given here is from material costing. So let's look at the question. Reliable India Private Limited is a startup company engaged in the manufacturing of agro-tech product from a raw material which is purchased at rupees 190 per kg. The company incurs a handling cost of 1470 plus freight of 770 per order. So every time they place an order, they are going to incur 1470 plus 770, that is rupees 2240 per order. This is the ordering cost. The incremental carrying cost of inventory of raw material is rupees 3 per kg per month. Now, when we say 3 per kg per month, so it will be 3 into 12, 36 per kg per annum. Then they say in addition, the cost of working capital finance on the investment in inventory of raw material is rupees 20 per kg per annum. So, what is the total carrying cost per kg per annum? It is 36 plus 20, 56 per kg per annum. So, reading the question, it looks like they are going towards the calculation of EOQ. Anyways, the annual production of the product is 1,50,000 units and 3 units are obtained from 1 kg. So, what will be the annual requirement of raw material? 1 kg gives us 3 units. We require 1,50,000 units. So, 1,50,000 divided by 3, we are going to get 50,000 kgs of raw material requirement on a per annum basis. Assume 360 days in a year. Now, required, calculate the economic order quantity of raw material. So, how are we going to calculate? It is nothing but under root 2AO by C. What is the annual requirement? Annual requirement is 50,000. Ordering cost is 2240 divided by carrying cost is rupees 56 per kg per annum. So, 2 into 50,000 into 2240 divided by 56 under root. We get EOQ as 2000 kgs. Simple. Second, determine how frequently the company should order for procurement be placed. So, how frequently should we place an order? Now, if my EOQ is 2000 and my annual requirement is 50,000 units, how many orders we need to place? We need to place 50,000 divided by 2000, which is nothing but 25 orders we have to place every year. Now, they are not asking us how many orders are to be placed, they are asking us how frequently. So, let us divide it by the number of days. So, how many days they are asking us to assume in a year? They are saying assume 360 days. So, if we do 360 divided by 25, we get 14.4 as the frequency. So, every 14.4 days we have to place one order. Alright, third, if the company proposes to rationalize placement of orders on quarterly basis, so instead of the EOQ which is 2000, they want to place order on a quarterly basis. So, how many units will they place every time they place an order? They are going to place an order for 50,000 annual requirement divided by 4, because we have 4 quarters, so 12,500 units. So, they are saying if the company proposes to rationalize placement of orders on quarterly basis, that is to say 12,500 units per order, determine the percentage of discount in the price of raw material that should be negotiated. So, how are we going to calculate this? See, at the EOQ, the ordering cost, carrying cost and the cost of buying is at the optimum, it is the least. So, we will have to calculate the total cost as per the EOQ. We will have to calculate the total cost as per this proposal, that is 4 orders in a year. We will have to see how much is the incremental cost. Whatever is the incremental cost, that the company has to ask for as a discount, and that negotiation has to happen. So, let us look at the calculation quickly once. So, EOQ we have calculated as 2000 per kg, the number of orders were 25. the frequency of placing an order has come as 14.4 days, and then the discount to be negotiated. So annual requirement is 50,000 kgs. Under the EOQ we are ordering 2,000. Under this, as we discussed, 12,500 kgs per order. So number of orders 25 and 4. So cost of placing the order, cost of carrying the inventory. If we total the both of them, we get the cost. So under the EOQ we have 1,12,000, whereas under the negotiated on quarterly basis we have 3,58,960. That means the whatever incremental cost is there, at least that much discount we have to ask for. And if we do that math, the differential is coming to 2,46,960. So the percentage of discount is 2,46,960 by the total existing cost of buying the material, which is nothing but 50,000 into, I think, per kg they have given the rate of 190. So 2,46,960 by 95 lakhs into 100 gives us the discount to be negotiated as 2.6%. So this was question 1. Now let's go to the second question. This question is from the employee cost and it is based on calculation of the labor turnover rate and the labor flux rate. Let's look at the question. Following information are available from the cost records of BMR Limited. Calculate the labor turnover rate and the labor flux rate. Now turnover rate, they have not specified whether they want us to calculate the separation rate or the replacement rate. So we will do one thing, whatever is possible we will calculate and give them, alright, and then of course the flux rate. Let's look at the information. Number of employees as on 1/4/21, 9,400. So at the beginning there are 9,400 employees. Number of employees as on 31/3/22, 10,600. So at the start 9,400, at the end 10,600. If I was to calculate the average number of employees, that will come as 10,000. So the average number of employees is 10,000. Alright. During the year, 160 employees left while 640 were discharged. So in a way 160 also have gone and 640 also have gone. So if I have to calculate the total number of separations, it is 160 plus 640, which is 800. And if we were to calculate the labor turnover separation rate, so that will be 800 divided by 10,000 into 100. That is 8%. Alright. So during the year 160 employees left while 640 employees were discharged and 1500 employees were recruited during the year. So total number of joinees are 1500. Of these, 400 employees were recruited based on exits. So total hiring was 1500. Alright. The breakup of that 1500 is 400 is towards replacements. Whoever left, we have replaced them, and 1100 are new joinees. Alright. So if I was to calculate replacement rate of turnover, then that will be 400 divided by 10,000 into 100, that is 4%. And new joining rate will be 1100 divided by 10,000 into 100, that is 11%. And so those are the ways in which we are going to calculate the ratios. And ultimately they are also asking us to calculate flux rate, which will be nothing but separations plus exits plus your new joinees. So we will have to combine all of that and calculate the ratio. Let's look at the solution. So turnover, first we are talking about separation method. So number of employees separated divided by the average number of employees. As we have discussed, it is 8%. Replacement, the number of employees who have been replaced. So 400 employees have been replaced. So number of employees replaced divided by the average number of employees, that comes to 4%. New recruitment, so out of 1500 we said 400 are replacements, so 1100 are going to be the new recruits. So 11%, 1100 by 10,000 into 100, that is going to be the replacement ratio. And lastly, flux method, number of separations plus number of replacements plus number of new joining. So 800 plus 400 plus 1100, addition of all of that divided by 10,000, which is 23%. So pretty simple, straightforward question. You can expect such questions for 5 marks. Let's look at the third question. Now the third question is from the topics of overheads. Sandy Limited is a manufacturing company having 3 production departments A, B and C and 2 service departments X and Y. The following is the budget for December 2022. So they have given us the direct material cost and the direct wage cost for each of the departments A, B, C, those are the production departments, and service departments X and Y. Then they have also indicated the factory rent, power, depreciation and other overheads. Then they are mentioning about some additional information. They are giving us the area per, area in SFT that each of those departments is occupying. They have given us the capital value of assets in rupees and lakhs for each of the departments, the number of machine hours taken by each of the departments, horsepower of the machines for each of the departments. Next, they are saying apportionment of expenses of service department is as under. So service department X, 72% has to be apportioned to department A, 24% to B, 48% to C and 16% to Y. So I will not call it as percentage, rather I will say the proportion. So it should be 72 is to 24 is to 48 is to 16. So I correct myself, not percentage. Percentage total should always come down to 100. So this is the ratio in which it has to go. Likewise, service department Y has to go to A, 96 is to B, 56 is to X, 8. Nothing has to go to C. So here we are looking at some reciprocal redistribution. So X gets apportioned to Y and something from Y again gets apportioned to X. So we will have to go on doing it step by step. Now let's look at what method they want us to use. They are saying prepare a statement showing distribution of overheads to various departments. So first things first, what we will have to do is these overheads that have been given, factory rent, power, depreciation and other overheads, we will have to prepare a statement distributing them to the various departments A, B, C and 2 service departments X and Y. So on what basis are we going to do that? We will have to do that on the basis of additional information that they have given. So probably for factory rent, we will use the area in square feet. For depreciation, we will use capital value of assets in lakhs. So we will use that proportion to distribute the depreciation. For probably the power, we can use the horsepower of machines and compare it with the machine hours and then do it. And ultimately for other overheads, we may use the machine hours for the calculation. So that distribution summary we will have to prepare. That is requirement number 1. Second requirement is prepare a statement showing redistribution of service department expenses to production department using repeated distribution method. So what is this method? We will go on redistributing from one department to the other till such a point where the amount becomes insignificant and it can be directly attributed to the other department. So step by step we will have to redistribute. First X goes to A, B, C and Y, then whatever is the total of 5, it goes to A, B and X. Then again X we will distribute to A, B, C and Y. Then balance of 5 will distribute to A, B and X and so on we will go on and so on and so forth. We will keep on doing that till it becomes negligible. There is also one more thing that they want us to calculate. Also calculate the machine hour rate for the production departments A, B and C. So once we have finished the primary distribution of overheads and also done the secondary distribution of service department to the 3 production departments, we will get the total overheads. We will divide it by the number of machine hours and calculate what is the machine hour rate for production departments A, B and C. So let's look at how they have approached the solution. So first things first, overhead distribution summary. So direct material goes directly, direct wages goes directly. As far as the factory rent is concerned, it is going in the proportion of area in square meters which they have given in the question. So that total of 640 is being distributed between the departments. Likewise power. So HP of the machines into the number of hours. Let's take an example. So if I talk about department A, the HP is 80 and the number of hours is 1600. That means 1600 into 80, we will require total 1,28,000 kilowatt hours of consumption. For department B, it will be 3200 into 64. That will be 4,800. Like that, we have to calculate for all the departments and then take the proportion for distribution. So here they have also done the same thing. The number of machine hours into the horsepower, number of machine hours into the horsepower for departments A, B, C, X and Y, and then they have taken the ratio, simplified it, brought it down to 10:16:16:3:5. Alright. Then depreciation on the basis of capital value of assets, as we discussed. Other overheads is going in the proportion of machine hours. So like this, they have done the primary distribution of overheads. Once the primary distribution of overheads is done, then we go to the secondary distribution or the redistribution using the repeated distribution method. Now from the previous working, we have this total overheads. We start from there. So 4,32,000 for A, 592 for B, 960 for C, 760 for X and 856 for Y. Now first things, department X, we will distribute it to departments A, B, C and Y in proportion of 72:24:48:16. So this is the requirement. Alright. So once we do that, this 7,60,000 gets distributed to all the 3 production departments and 1 service department Y. Now what will be the total of Y till this level? 8,56,000 plus 76,000, that is 9,32,000. Now this 9,32,000 gets redistributed to the 2 production departments and to the service department X. So like that we go on doing the repeated distribution till finally it becomes negligible and we transfer it to the production departments. So we get the total overheads for production department A as 13,57,000, for B as 10,40,000 and for C as 12,02,050. Once we have that, we will divide it by the number of machine hours to arrive at the machine hour rate for each of the departments. So that is how the distribution and redistribution of overheads is to be computed, and finally the machine hour rate for the production departments is to be computed. So in this question there is no technical difficulty. So it is a very simple straightforward question. Though it is a little lengthy, you can expect this question for something like 8 marks or 10 marks to be given in the examination. Now let's look at the next question. Question 4. Now this question is from the topic of activity based costing, ABC costing system. Hygiene Care Limited is a manufacturer of a range of goods. The cost structure of its different product is as follows. So they have hand wash, detergent powder and dishwasher. They are giving us the direct materials in rupees per unit, the direct labor at rupees 10 per hour and given as rupees per unit. That means, for example, the hand wash is given as 45 rupees per unit. So we have to interpret it as what? It is 4.5 hours at rupees 10 per hour and 45 is the cost per unit. Likewise for detergent powder and for dishwasher. Production overheads rupees per unit. So 40, 50 and 40. They have arrived at a total cost of 235 per unit for hand wash, 230 for detergent and 235 for dishwasher. Then they have given us the quantity produced, 30,000 for hand wash, 60,000 for detergent and 90,000 for dishwasher. Hygiene Care Limited was absorbing on the basis of direct labor hours. So till now they were following the traditional absorption method, single overhead recovery rate method, where they were using direct labor hours as the method of absorbing the overheads, as the basis for absorbing the overheads. Management accountant has now suggested that the company should introduce activity based costing system and has identified the cost drivers and the cost pools as follows. So they have identified the cost pool as goods receiving. The cost driver is the number of dispatch orders, associated cost 8,88,000, inspecting and testing, number of production runs is 26,82,000, dispatching, cost driver number of dispatch orders, cost is 6,30,000, storage cost, the cost driver is number of batches of material and the associated cost is 36 lakhs. The following information is also supplied. So they have given us the number of batches of material. So this will be used to apportion the storage cost. Number of dispatch orders. They have given us 360, 540 and 600. So number of dispatch order is to be used for goods receiving and also for dispatching. Alright. Then number of production runs 1500, 2100 and 2400. This is to be used as a cost driver for inspecting and testing cost. And lastly, they have given number of dispatch orders. Now again it is given number of dispatch orders 600, 900 and 1000. Now I have a small confusion here. Now what is my confusion? Sir, they have given the cost driver to be used as number of dispatch orders for goods receiving also, and they have given the same thing for dispatching also, but in terms of the cost drivers they have given us two levels. Now which one to use for which? Shall I use this 360, 540 and 600 for goods receiving, or should I use that for dispatching? Should I use the 600, 900 or 1000 for goods receiving or for goods dispatching? Now the question is silent. They have not given anything specific. We have to do a best case assumption and go ahead. But luckily in this question, if you observe, one good thing has happened. Now if I take this first line item, they are saying the number is 360, 540 and 600. If I strictly take the proportion, it will be 6:9:10. Alright. Likewise, if I take the proportion of the second number of dispatches given, that also will be in the proportion of 6:9:10. So luckily it is the same proportion, so our answers won't change. But having said that, if these two were different and if there is such a typographical error, you take whichever you want to take and make a suitable assumption. There is lack of clarity in the question. However, since the proportion is same, we will use the proportion and we will go ahead. Required, calculate activity based cost for all the three products. So what we need to do, we need to calculate what are the activity cost recovery rates. So we have the activity cost pool, we have the activity cost, we know the cost driver. We have to find out the recovery rate per unit of cost driver, which we call it as activity based cost overhead recovery rate. So once we calculate that, we will be able to apportion it easily. So how will you calculate? See, what are the total number of batches? 720 plus 780 plus 900. So we have 2400 batches. So this we will divide by 2400. 36 lakhs divided by 2400. 1500 per batch. So when you are preparing the cost sheet, take 1500 into 720 for hand wash. That will give you the cost to be apportioned for that. Likewise 1500 into 780 for detergent, or 1500 into 900 for dishwasher. You can do that, or you can use the proportion also. You can say 720 is to 780 is to 900. This is the proportion in which I want to distribute the cost. But the way that we have learned in all our recordings and previous examples is, we will calculate the fixed overhead recovery rate activity wise. So that is the 1500, that is 1500 for storage cost. Second, number of dispatch orders. So 360 plus 540 plus 600. 1500 is the total number of dispatches. So I am assuming that set of number is for this. So 8,88,000 divided by 1500, that will be 592 per dispatch. Use that recovery rate to calculate the solution. Then the number of production runs, 1500 plus 2100 plus 2400, we get total as 6000. So divide the cost by 6000, we get 447. And lastly 600 plus 900 plus 1000, that is 2500. So 6,30,000 by 2500. At 252. So we are going to use these rates in order to calculate, and whatever we get the total activity based production cost for all the three products. Now let us quickly run through the solution. So here in the solution given in the RTP, they have used the proportions, the ratios, in order to distribute that. You may use the rates that we have given. You are going to get exactly same answers. Don't worry about that. So they have arrived at the total activity cost based on the activity distribution divided by the number of units that is produced, added the prime cost, that is the cost of material and cost of labor, arrived at the total cost per unit. And then they have given a note which says this question can also be solved using the cost driver rate, which is the method that we keep using, and based on that also if you do, you are going to get the exact same answer. So again I would rate this question's difficulty as easy, and it is a very straightforward question from activity based costing. The only confusion here in this question is they have not clearly specified which dispatches refer to inwarding and which refer to dispatching. So that lack of clarity assumption we need to make. Luckily the proportion is same, so we can conveniently go ahead and do whichever for whichever line item, but otherwise make an assumption and we are good. Let's look at the next question. Now this is a simple question from cost sheet, and we are required to prepare the cost sheet and calculate the cost of production. Alright, from the following data of Motilal Limited, calculate cost of production. So repair and maintenance paid for plant and machinery, 9,80,500. Shall we include it in the cost of production? Yes, since it is related to normal repairs and maintenance of plant and machinery. Next, insurance premium paid for inventory. Yes, insurance premium paid for plant and machinery. Alright. Raw material purchased 64 lakhs. Opening stock of material we will add. Closing stock of material, raw material we will deduct. Wages paid 2320. Value of opening work in progress 4,06,000. Value of closing work in progress. So this we need to adjust. Add opening, deduct closing, arrive at the final cost. Quality control cost for the products in the manufacturing process, this also needs to be considered. R&D cost for improvement in production process needs to be considered as a part of your production cost. Then administrative cost. Now administrative cost for factory and production is going to get included in our cost sheet, but other administrative cost which are in admin in nature is not going to get included in our cost of production. It will go to administrative, sales and distribution cost. Amount realized by selling scrap generated during the manufacturing process. So whatever inflow we have, this we are going to deduct from the total cost. Packaging cost necessary to preserve the goods for further processing. So this is not secondary packaging, this is primary packaging. It is related to the manufacturing process only. So we will add this. If it was secondary packaging, we would have taken it to selling and distribution cost. Salary paid to director. Salary paid to director technical 8,90,000. Now the salary paid to directors is an administrative cost and is not going to get included in our cost sheet. So having discussed these points, let's quickly run through the cost sheet that they have given. So as we discussed, raw materials purchased, add opening stock less closing stock, we get the raw material consumed. Add wages, we arrive at the prime cost, which is 85,62,000. Then we go on adding repair and maintenance to plant and machinery, insurance for inventory, insurance for plant and machinery, QC cost, R&D cost, administrative cost related with factory and production. We arrive at the total cost, we adjust for opening WIP and closing WIP, arrive at the total cost. From this, let's deduct, as we discussed, the amount realized from sale of scrap and add the primary packaging cost. So our total cost of production is 1,05,48,000. And as discussed, other administrative overheads and salary paid to director technical are going to remain out of our cost sheet. This is not going to go into the cost of production. These are administrative overheads. So that was, a simple straightforward cost sheet. You can expect such questions in examination for 5 marks. Let's look at the next question. Now question 6. This question is based on, reconciliation of profits as per cost account and financial account. So this is, integrated and non-integrated system of accounting where we have to do a reconciliation. So how do we generally do a reconciliation? They are going to give us the financial profit, they are going to give us the costing profit. You either start from the costing profit, start adding and deleting the line entries which require adjustments, arrive at the financial profit, or start with financial profit, do the adjustments, arrive at costing profit. So we need to prepare that kind of reconciliation. Now let us run through the line items. The financial records of Riva Private Limited show a net profit of 1,69,500 for the year ended March 22. However, the cost accounts disclosed a loss of 88,500 for the same period. The following information were revealed as a result of scrutiny of the figure of cost and financial accounts. So they have given us a list of items and they are asking us to prepare a reconciliation statement by taking costing net loss as base. So I said we can either start from financial, arrive at the cost, or we can start by costing P&L and arrive at the financial P&L. But here they are specifically telling us you take costing net loss as the base. So don't do that mistake of starting from the financial P&L. In spite of doing everything correctly, we may end up losing marks. So take the costing net loss as the base. So our starting point will then be a loss of 88,500, and then we start doing all the adjustments to arrive at the financial P&L. So let's take up line item by line item. Administrative overhead under recovered. So we have not recovered. Now we will have to recover. So this will further add to our loss. So this will be a item of deduction. Factory overhead over recovered. We have recovered extra in the costing accounts. So we need to add back. Depreciation undercharged. Again now we need to charge. So this will be minus item. Dividend received. Now dividend is a financial item. It is taken only in financial P&L. It is not there in costing P&L. So we need to add this. Loss due to obsolescence charged in financial accounts. It is charged only in financial accounts. Now we need to charge it to the costing P&L to arrive at the financial P&L. So reduce. Income tax provided only in financial. So we need to reduce. Bank interest credited in financial accounts. Credit meaning income. So this income is only in financial. We need to now add it to the costing P&L to arrive at the financial P&L. Value of opening stock. Now in cost accounts, the opening stock was at 4,12,500 and in financial accounts it is 3,62,500. Let's understand. See, opening stock comes on the debit side of P&L or the credit side of P&L? It comes on the debit side of the P&L. That means it is of a expenditure nature. Alright, it is going to add to my cost. So in cost accounts I have taken 4,12,000, but in financial accounts it is only 362,500. So the differential 4,12,500 minus 362,500, 50,000. Cost is more in cost accounts. We need to add this to arrive at the financial P&L. Next, value of closing stock. Closing stock is always on the credit side. It is more like a income. In cost accounts it is 313,750. In financial accounts it is 3,30,000. So 3,30,000 minus 313,750. In financial accounts my costing valuation, my profit to that extent is more by 16,250. So that we need to add. Goodwill written off in financial accounts. Only in financial accounts it is written off. We need to now write off. Notional rent of own premises charged in cost account. So it has been charged. We need to remove it. So we will add back. Provision for doubtful debts only in financial accounts, we need to adjust for that. Alright, so let's quickly once again review what we have written before we compare the solution. So administrative overheads under recovered. So we are going to now deduct. So treatment is correct. Fixed overhead over recovered, we will add back. Depreciation is undercharged, we will now deduct. Dividend received only in financial accounts, so we need to add to the profitability. Loss only in financial accounts, we need to deduct. Income tax provided only in financial accounts, we need to deduct. Bank interest income only in financial accounts, we will add to the profit. Value of opening stock. So expenditure in cost accounts is 4,12,000, expenditure in financial accounts is 362. Expenditure is more in cost accounts. So if we have to go to financial accounts, we have to add back, and value of closing stock in cost accounts is less, in financial accounts is more, it is in the nature of income, we need to add back. Goodwill written off only in financial accounts, we need to reduce. Notional rent charged only in cost accounts, add back. Provision for doubtful debts only in financial accounts, we need to reduce. So let's quickly do the math. So minus 88,500 minus 63,750 plus 337,500 minus 65,000 plus 50,000 minus 42,000 minus 1,09,000 plus 34,000 plus 50,000 plus 16,250 minus 62,500 plus 1,50,000 minus 37,500, we arrive at 1,69,500, which is given as the financial profit. So this is how the reconciliation has to be prepared. Let's quickly look at the solution. So same thing, they have started with the loss, they have given all the additions at one place, all the deductions at one place, arrived at the net profit of 1,69,500. So a simple reconciliation, you need to be careful with the closing stock. So students generally tend to get confused with the valuation of closing stock, opening stock. Always remember, opening stock comes to the debit of the P&L. So if the costing opening stock is more compared to the financial opening stock, that means more expenditure is there in costing P&L. We need to reduce that expenditure. We need to reduce that expenditure, meaning we need to add back. So like that, please be a little careful. Let's look at the next question. Now this question is from job and batch costing. A jobbing factory has undertaken to supply 200 pieces of a component per month for ensuing 6 months. Every month, a batch order is opened against which material and labors are booked at actual. Overhead are levied at a rate per labor hour. The selling price contracted is rupees 80 per piece. From the following data, compute the cost and profit per piece of each batch. So they want profitability per piece of each batch order separately, and they also want the overall position of order for 1200 pieces. So they have given us data for 6 months, wherein they have given us the number of pieces output for each batch, the material cost, wages cost, and the direct labor in hours. The other details are chargeable expenses, how much of overhead is to be recovered. So they have given what is the chargeable expenses for that month. They have also given the total number of hours for that month. We need to compute what is the overhead recovery rate per hour, and based on that we will recover overheads for the batch. For example, for the month of January it is 1,20,000 divided by 4,825. For the month of February, 105,600 divided by 4,424. So on and so forth, we will calculate for all the months. For the month of January, if 240 labor hours are used, so 240 into 25 per hour, 6,000 rupees will be the overhead chargeable expenses that will go to the cost sheet for that batch order. So like that, you will have to do the overhead calculation for every batch, arrive at what is the total cost, material cost plus direct wages cost plus overhead. So for example, 6,500 plus 1,200 plus 6,000, that will be 13,700 divided by 210. So my cost is going to come to 65.238 or 4 for that month. What is the selling price that we have contracted? The contracted selling price is 80 per piece. So if we take 80 per piece as the selling price, we get 14.76 as the profit per piece of each batch order. Like that we have to calculate for all the orders, and whatever is the average we will take and calculate for the total order. Let's look at the solution. So they have indicated the batch output in the number of pieces. What is the sales value? At 80, they have indicated the material cost, which is directly from the question, direct wages directly from the question, chargeable expenses as we discussed, it will be chargeable expenses divided by the labor hour for that month into the number of labor hours for the batch. They have arrived at the total cost, profit per batch, total cost per piece, and ultimately what is the profit per piece. And for the overall 1200 pieces, they have taken 1200 into 80 per piece as the revenue, and 1200 into whatever average total cost they have got, 73.4, that they have taken, indicated what is the overall profit. So I would again rate this question as easy, simple and straightforward. You can expect such questions for about 6 marks or 8 marks. They can as well give it to you, for 5 marks if they want to really make the paper a little lengthy, and can be put as a compulsory question. But the level of difficulty is easy. It is not very tough. Let's look at the next question. Now the next question is from the topic of contract costing. XYZ LLP, contractors and civil engineers are building a new wing to a school. They quoted fixed price for the contract, or the quoted fixed price for the contract is 30 lakhs. Works commenced on 1st January and is expected to be completed on schedule by 30th June. So 1st January, let us say 22, and 30th June 23. So we are looking at 12 plus 6, about 18 months. Data relating to the contract at the year ended March 23 is as follows. So they are saying January 22, 1st January it started, and we are talking about ending on 31st March 23. So 15 months are over, 3 months are remaining. Balance. Alright. Now let's look at the data. Plant sent to site at the commencement of contract, 2,40,000. When we prepare the contract account, it will be on the debit side. It is a cost that we have incurred. Hire of plant and equipment, again on the debit side of the account, 77,000. Material sent to site will be debited to the contract account, 6,62,000. Material returned from site, so material coming back, it will be credited to the contract account, 47,000. Direct wages paid, debited to contract account. Wage related cost, debited to contract account. Direct expenses incurred, debited to contract account. Supervisory staff salaries, direct and indirect, debited to contract account. Regional office expenses apportioned to the contract, so debited to the contract account. Head office apportioned to contract, debited to contract account. Surveyor's fee, again debited to contract account. Progress payment received from the school. So the payments that we have received till now is 18 lakhs. So information till here is relatively straightforward. Additional information. Plant is to be depreciated at the rate of 25% per annum, following the straight line residual method with no residual value. Alright. Unused material on the site at 31st March are estimated to be at 50,000. So this will be the closing material at site, will be credited to the contract account. Wages owed to direct workers total 40,000. So they have indicated something paid. So they said direct wages paid is 960. To this 960 we need to add the outstanding amount of 40,000 payable. Budgeted profit for the contract is 8 lakhs. Alright. Value of work certified by the surveyor is 24 lakh. The surveyor has not certified the work costing 1,80,000. So value of work certified will get credited 24 lakhs, and the value of work uncertified closing WIP will be 1,80,000. You are required to prepare the account for the school for 15 months ended 23 and calculate the notional profit to date. So be careful, we have to do it for 15 months. The place where the students may go wrong is the depreciation calculation. They may calculate only for 1 year, but we need to calculate it for 15 months. Let's look at that calculation. So plant that we have sent was 2,40,000. So if we take 2,40,000 into 25%, we get 60,000 per annum. This is for 12 months, but we need to calculate for 15 months. So I will do into 15 by 12. So the depreciation that needs to be charged is 75,000. Indirectly, if I am preparing my contract account, if I am taking the value of plant sent to site on the debit side of the P&L, then I will say the closing value of the plant has to be reduced by 75,000. So the carrying value will be 2,40,000 minus 75,000, 1,65,000. In this way, we are going to provide for the depreciation. Alright. The surveyor has not certified the work costing 1,80,000. You are required to prepare for the school contract for 15 months ended 23 March and calculate the notional profit to date. So looks like a again simple question. You can expect it for 6 marks or 8 marks. No complications involved except for being careful with that 15 months. Let's quickly look at the contract account they have provided in the solution. So 2,40,000 plant, hire of plant debited, materials debited, wages paid debited, outstanding also added, wage related cost added, direct expenses added, supervisory staff direct, indirect both have come, regional office expenses apportioned have come, head office fees has come, surveyor's fees have come. Then material returned is credited, closing value of plant as we computed 1,65,000 has come, the closing value of raw material or the materials is taken to the credit, value of work certified, cost of work not certified. If we take the balancing figure, we get the notional profit as 4,80,000. So again, it was a simple straightforward question. Let's look at the next question, which is from process costing. Question 9. Dairy Wala Private Limited is engaged in the production of flavored milk. Its process involves filtration and boiling of milk. After that, some sugar, flavor, color is added and then letting it cool to fill the product into clean and sterile bottles. For producing 10 liter of flavor milk, 100 liter of raw milk is required, which extracts only 45 liters of standardized milk. Alright. So here what we need to understand is when we are inputting 100 liter, they are saying as a standard we are getting only 45 liters of milk. That means the input to output ratio is only 45%, 55% is going to go as evaporation, which is going to be our normal loss. Alright, following information regarding process 1 has been obtained from the manufacturing department of Dairy Wala Private Limited for the month of December 2022. Opening WIP 13,500 liters. The cost of that is milk 1,50,000, that is the raw material, labor 45,000, overhead 1,35,000. Milk introduced for filtration and boiling 3 lakh liters, 15 lakhs, direct labor 6 lakhs, overheads 18 lakhs. Abnormal losses 3,000 liters. Degree of completion, milk was 100% completed and labor and overhead was 80% completed. Now for what are they giving this degree of completion? They are giving this degree of completion for the abnormal loss. So we have to read it as for the abnormal loss of 3,000 liters, whatever has happened, milk was 100% complete raw material, labor and overhead to the extent of 80%. Closing work in progress 27,000 liters, and as far as this closing work in progress is concerned, the degree of completion milk is 100%, labor and overhead is 80%. Milk transferred for packing is 1,18,500 liters. You are required to prepare using the average method the statement of equivalent production, the statement of cost, the statement of distribution cost and process 1 account. So, in short, we need to understand how much equivalent units have been produced, and for calculation of this equivalent units, we need to adopt the average method. So, under the average method, we will take the, opening stock, we will take whatever has been introduced during the period, that is the total included. We will take how much is the total output, finished units, and adjust for the abnormal loss, normal loss, etc. Arrive at the total, calculate the equivalent units. Then we will prepare a statement of cost. When we are doing the statement of cost, we will take the opening cost, add the cost incurred during the period, arrive at the total cost divided by the equivalent number of units, that is the average method. Then statement of distribution of cost, how much is going to go towards the units transferred to the next process, how much is going to go towards the abnormal loss, and how much is going to go towards the closing stock. So that distribution we need to prepare, and ultimately we also need to prepare the process 1 account. So let's do a small math here. Opening was 13,500 liter, introduced was 3 lakh liter, abnormal loss is 3000 liter. So this is the opening, this is the introduced, this is the abnormal loss, 27,000 is the closing WIP, and 1,18,500 has been transferred to next process. So if we do a small math, 13,500 plus 3 lakhs minus 3,000 minus 27,000 minus 118,500 is 1,65,000. This 1,65,000 is nothing but the normal loss, and which is equals to 55% of the material introduced, that is 3 lakh. So this is a small reconciliation which will be helpful when we are preparing the equivalent unit. So when I was doing it for the first time, I missed taking the closing work in progress in the rough math that we were doing. So if we include that also, this is reconciling. 3 lakhs is the material introduced, 55% of that is the normal loss. Why? Because they are saying we are going to get only 45% yield. So which is exactly tallying with the 1,65,000. So now let's quickly look at the calculation that they have provided. So statement of equivalent production. So opening WIP 13,500, introduced 3 lakhs, totally we have 3,13,500. As we were discussing, the number of units completed and transferred 1,18,500, 100% complete in terms of milk and material, 100% in terms of labor and overhead. The abnormal loss 3,000 units, they said 100% in respect of milk, but 80% in terms of labor and overhead. Likewise, closing stock 100% in terms of milk and 80% in terms of labor and overhead, and the normal loss 55%, that is 1,65,000, we will take it as dash. Why dash? Blank. Because cost of normal loss has to be absorbed by the good unit. So that is why we are keeping it blank. So we get the number of equivalent units for milk as 1,48,500 and for labor and overheads as 1,42,500. Now based on this, we can calculate what is the cost. So cost of opening WIP, whatever they have given in the question, as it is we have written. Cost incurred during the period, as it is we have written. If we add, we get the total cost. We have the equivalent number of units, 1,48,500 for material and 142 for labor and overheads. We get the cost per equivalent unit. Once we have this cost per equivalent unit, we can prepare a distribution summary. So for goods transferred 1,18,500, we can take the total cost of 29.216. So 1,18,500 into 29.216, we get 34,62,096. For abnormal, we will take milk 3,000 equivalent units. This is coming from your equivalent number of units sheet here. Labor 2,400. The rates are coming from our previous table, 11.11 and 4.526. So 11.11, 4.526 and 13.579. So that is how we arrive at the value of the abnormal loss, and likewise in a similar fashion value of closing WIP. Then they have also asked us to prepare a process account which is simple and straightforward. So opening WIP milk with the cost, labor included in the opening stock, the milk introduced during the period, labor cost and overheads incurred during the period. On the other side, normal loss, abnormal loss, process to account transferred and closing WIP. They are saying 0.44 paisa difference they have adjusted in the abnormal loss, which is due to the balancing figure, rounding of differences. So, pretty simple, straightforward. Now, here in this question, what was tricky? Tricky is the understanding of the part that we have to use the average method for calculation of equivalent units. The calculation of equivalent units will change if the question had asked us to do FIFO. So, we will say, okay, opening stock we have completed something, during the year we have completed something, and closing stock we have completed something. Based on that, we will have to calculate the equivalent number of units. Let's look at the next question. Now, the next question is from the topic of joint product, byproduct. Question number 10. KP Limited produces and sells the following products. So, they have given us 5 products A, B, C, D and E. They have given us the number of units. They have indicated the selling price at the split off point and selling price after further processing. Cost of raw material rupees 89,75,000 and other manufacturing expenses cost rupees 13,67,500 in the manufacturing process, which are absorbed on the products on the basis of their net realizable value. So, what they are saying indirectly is this 89,75,000 the material and 13,67,500 the manufacturing cost, which essentially are the joint cost for the 5 products. They are saying they are absorbed on the basis of their net realizable value. Now, I have a doubt. Sir, what is meant by net realizable value? Net realizable value is the value that we will get after deducting any incremental cost that we have to incur. So, generally the questions mention the realizable value at the split off point, or they say realizable value after the further processing, but here they have not mentioned anything. They have not said whether we should consider the realizable value at the split off point or we have to consider after further processing. So, ideally it should be at the split off point if all the products are not capable of being further processed, or if they specifically say, then we will calculate which products can be further processed. Based on that, we will take the net realizable value for products that can be further processed and the sale value at split off point for the ones which cannot be. Now, in this question they have not mentioned anything. We are left with no option but to make a assumption. Now, as we go further in the question and we look at the solution, we will realize that they have taken an assumption that net realizable value, they want to take the selling price after further processing. So, anyways, let's keep our minds open to the idea that okay, it can be at the split off point also, it can be sale value at after further split off after further processing also, and when essentially they are saying net realizable value, it should be less of incremental cost. So, that is the NRV at the split off point. But however, let's keep our minds open and understand what they have done. Alright, the further processing cost of A, B, C and E. So, for D there is no further processing, are 31,25,000, 3,75,000, 1,25,000 and 3,75,000 respectively. The fixed costs are 11,82,500. You are required to prepare the following in respect of the coming year. Statement showing income forecast of the company, assuming that none of the further products are further processed, and then statement showing income forecast assuming that the products A, B, C and E are to be further processed. So, they want us to prepare an income statement. So, how are we going to prepare an income statement product wise? Take the revenue, deduct the joint cost which we are going to apportion based on the net realizable value, deduct the further processing cost, arrive at the product profitability and the overall profitability. In point A, we will not take the incremental revenue, incremental cost, we will take at the split off point because they want us to assume nothing is going to further process. In B, we will further process and then calculate the profitability. Let's look at the solution. Alright, they have given a working note wherein they have indicated how they want to apportion the joint cost on the basis of net realizable value method. Now here what they have done is they have taken the sales value after the split off point, or rather I will say after further processing. So they have taken the sales value after further processing. This you can check: 62.5, 42.5, 30. For D it is at the split off point, and for E they have taken 50. These are all values after the further processing, less whatever is the post separation cost they have calculated, and that is how they have arrived at the net realizable value. So these are the net realizable values. Totally it is coming to 4,29,37,500, and in this proportion they have apportioned the joint cost. Now what is the joint cost? Joint cost comprises of two items, as we discussed: 8975 the material cost and 1367 the manufacturing cost. So totally 1,03,42,500 the joint cost has been apportioned in this proportion to respective products. Bit 1, assuming that none of it is going to be further processed. So they have taken the sales revenue at split off without further processing. They have apportioned the joint cost as per the above working, arrive at the total profit, deducted the fixed cost, arrive at the overall profitability. Same calculation, here we also have to take the further processing cost to arrive at the second bit solution. So sales revenue, apportioned cost, extra key item is further processing cost. They have arrived at the total profitability, deducted the fixed cost, arrived at the overall profit. So in terms of complexity, it is simple. So they have not clearly mentioned whether we have to take at the split off point or after further processing. The entire solution is NRV, net realizable value after further processing, is what we are assuming. So question 11 looks to be a small question from service costing. Prepare cost statement of Panipat thermal power station showing the cost of electricity generated per kilowatt hour from the following data. So the total units generated are 16,50,000 kilowatt hours. Whatever is the total cost, we will divide by 16,50,000 to arrive at the cost per hour. Operating labor 21,75,000, repair and maintenance 7,25,000, lubricant spares and stores 5,80,000, plant supervision 435, administration overheads 29,000, insurance charges 15 lakhs, fuel charges 8 lakhs, and apart from that they are saying 7 kilowatt of electricity generated per kg of coal consumed at 4.75 per kg. So how much is the total coal requirement? It will be 16,50,000 kilowatt hours divided by 7 kilowatt hours per kg of coal into 4.75 per kg. So this will be our calculation for cost of coal. Depreciation is to be charged at 5% on capital cost of 3 crore 10 lakhs. So 5% into 3 crore 10 lakhs will be the depreciation. So we have to prepare a simple statement of cost where we show the fixed cost and the running cost and calculate what is the cost per kilowatt hour of energy. Let's look at the solution. So fixed cost they have taken directly: plant supervision, administration, insurance, depreciation 5% of 3 crore 10 lakhs. Total fixed cost comes to 63,85,000, and on a per kilowatt hour basis it is 3.87. Then operating labor, fuel charge, lubricant and spare stores, repair and maintenance. Coal cost, as we were discussing, 16,50,000 divided by 7 into 4.75 comes to 11,19,643. This is the total variable cost, and total cost per kilowatt hour is calculated at 7.14. Again, a pretty simple straightforward question. You can expect these questions for either 4 marks or as a compulsory 5 mark question. More chances are it will be a 4 mark question, because they usually don't give such a simple question for a compulsory 5 mark. Let's look at the next question from marginal costing. The following data are available from the budget records of Fine Sign Women's Handbag Company for the forthcoming budget period. Selling price per unit 1000, Variable cost per unit, cost of material consumed 750, sales commission 50 rupees, total variable cost 800. If we were to calculate the contribution per unit, that contribution per unit will be 1000 minus 800, 200 rupees per unit. Alright, annual fixed expenses, rent, salary, other fixed cost, total fixed cost is coming to 23 lakhs. Although the firm manufactures bags with different styles, they have identical purchase cost and selling price. Thank you so much. Requirement 1. What is the annual break-even point in terms of units and value? How do we compute? Break-even point is nothing but fixed cost by contribution per unit. How much is the fixed cost? 23 lakhs. So 23 lakhs divided by, if we do 200 per unit of contribution, we get break even point as 11,500 units in terms of units, and if we multiply it with 1000, we get 1 crore 15 lakhs as the break even point in value. That is simple bit A. Second, if the store manager is paid 1% commission on sales, how much is 1% of sales? Sales is 1000 per unit, 1% of that will be 10 per unit. So if he is paid 10 per unit, that is 1% commission on sales, what would be the annual break-even point in terms of units and value? Now if I pay additionally 10 units, 10 rupees per unit, what will happen? My contribution will go down from 200 to 190. Is my fixed cost going to change? No. So what will be the revised break-even point? It will be 23 lakhs divided by 190. So 23 lakhs divided by 190 if we do, we will get the break-even point as 12,105 point some change units, and if we multiply it by 1000 rupees, we will get the break-even point in rupees. So a very simple question. If the firm decides to pay a fixed salary of 9 lakhs in lieu of the sales commission, so they don't want to give per unit, they want to give fixed. So when they give fixed salary, this fixed cost of 23 lakhs will increase by 9 lakhs. It will become 32 lakhs. Alright. So if they give a fixed salary of 9 lakhs, what would be the annual break-even point in terms of units and values? Okay. So they are saying if the firm decides to pay a fixed salary of 9 lakh in lieu of the sales commission, they are saying instead of the sales commission of 50 rupees per unit and whatever extra we were paying, that 1%, 2%, etc., instead of all of that, in lieu of all of that sales commission, they want to give fixed 9 lakh. Then what will happen? Our fixed cost will be 32 lakhs. Alright. Our contribution per unit will be 1000 minus 750, 250 per unit. So the revised break-even point will be 12,800. Next, considering the break-even point requirement in A. So what is the break-even point requirement in A? 11,500 units. Alright. If the store manager is paid paid 2% commission on each bag sold in excess of break-even point, that means till the break-even point he will not get commission. Over and above the break-even point, whatever he is going to do is going to be, he is going to get paid 2% commission. How much is 2% commission? 1000 into 2% if we do, it will be 20 per unit. So he is going to get paid 20 per unit as commission over and above this 11,500. What would be the profit if 20,000 bags were sold? See, there are multiple ways in which you can do that. You can prepare the entire profitability for 20,000 bags and do it, or I will give you a shortcut approach which also can be adopted. See, up to the break-even point, what happens? We are at no profit, no loss. That means whatever contribution we are generating, we are able to recover the fixed cost completely. At BEP, we are at no profit, no loss. That means at 11,500 units, I am at break even, 0. Now, every unit additionally that we sell, we are going to generate how much contribution? We are going to generate a contribution of 200 per unit. Now, this ideally will only be my profit directly. So every additional unit that we sell will become the contribution on that every additional unit will become our profit, because fixed cost is completely recovered. So that will be the easiest way of computing. Here what they are saying, at 20 rupees per unit they will give us commission. So up to 11,500 no commission, we are at break even, no profit, no loss. After 11,500 how many units? 8,500 units. How did I get this? So totally they are talking about 20,000 bags. So 20,000 minus 11,500 is 8,000 into, normally my contribution is 200, but out of this 200, 20 commission has to go. So my profit will be 8,500 into 180, which will be 15 lakhs 30,000. So see, very simple question. You can do it, right by reading the question. You don't even have to go to the solution. Let's, however, quickly look at the solution and confirm that our answers are correct. So bit 1, 11,500 units, 1 crore 15 lakhs revenue. Bit 2, 12,105 point some change units, that is 12,106 units, and you multiply, you get the revenue. Break even point. So they have done the long way of doing it, but end of the day 8,500 units into 180 per unit, we are going to get 15 lakhs 30,000 as the profit. That is bit number D. In between bit C was there, that also we have correctly calculated. So this is the solution as far as this question on marginal costing is concerned. Let's look at the next question. Now this is from budget and budgetary control. EDF Limited produces 2 products using skilled labor and 2 types of materials. Shown below the information for the next month's budget. So they have given us product A, product B, the budgeted sales in units. So we are going to sell 4080 units of product A and 6120 of product B. This is the budget. Next, budgeted material consumption per unit in kgs. So for each unit of product A, we require 8.5 kgs of material X and 6.8 kgs of material Y. Likewise for B, 5.1 of X and 10.2 of Y. The standard labor hours allowed per unit of product is 5.1 hours for A and 8.5 hours for B. Material X and material Y cost rupees 8 and 10 per kg and labor are paid at rupees 30 per hour. So this material X is at rupees 8 per kg, Y is at rupees 10 per kg and labor is at rupees 30 per hour. Overtime premium is 75% and is payable if a worker works for more than 45 hours a week. There are 400 direct workers. The target efficiency ratio for the productive hours worked by the direct workers in actually manufacturing the product is 85%. That means if we work for 100 hours, the productivity is going to be only 85%. So we will have to understand how much labor time is required for manufacturing of product A and product B. Whatever is the standard time required, we will have to extrapolate it and increase it to accommodate for this 15%. Because the standard time will represent only 85%, we should understand how much is the 100% because of the efficiency ratio. Additionally, so what they are saying is, in addition to the non-productive downtime is budgeted at 15% of the productive hours worked. So we will have to find out the standard hours required. This we will have to translate to productive time by incorporating the efficiency ratio that is there, and this productive time we will have to further increase by adding the non-productive time to arrive at the total time. So we will calculate what is the standard time we will increase that to accommodate that 85% of efficiency. We will further increase that for non-productive downtime that is budgeted to the extent of 15% of the productive hours, and then we will get the total number of hours. Also, this total number of hours we need to understand how much is available, because anything over and above the time available is going to be paid a overtime premium of 75%. So all of that workings we will have to keep in mind. There are 4 6-day weeks in the budgeted period. So in short, 4 weeks into 45 hours per week into 400 workers. If we do 4 into 45 into 400, we get 72,000 hours of available time. This we will have to consider with how much is required for the manufacturing of product A and product B for the budgeted time. If it is in excess of the 72,000 hours, we will have to pay overtime premium. Alright. It is anticipated that the stock at the beginning of the period will be for product A 550 units, for product B 350, for material X 1200 and for material Y 600. The anticipated closing stock are also given, for the budgeted period as under product A 5 day sales, product B 5 day sales, material X 10 days consumption, material Y 5 days consumption. So first and the foremost thing, we will have to understand how many units of product A and B are to be manufactured. Once we know that, we will understand how much is the material consumption requirement. Once we know the material consumption requirement, we will understand how much material is to be bought. Also, once we know how many units are to be produced, we will understand how much standard time is required, how much productive hours is required, how much addition we have to do towards non-productive time, and how much is the total direct labor hours required. So all those computations will follow one after the other, but the starting point definitely is going to be the number of units that we need to manufacture. Let's look at the requirement. Required, calculate the material purchase budget. For purchase, I need to understand consumption. For consumption, I need to understand how many units are to be manufactured. Alright, and the wage budget, showing the quantities and the values for the next month. Now let me, give you an example. Let's take product A. Now product A, how many units are we planning to sell? We are planning to sell 4080 units. Alright, now are we going to manufacture 4080 units? No, because we have some opening stock, we have some closing stock. So we will adjust for that and we will understand how many units we need to manufacture. So we will say for product A, sales required is 4080, but out of this some units are already available in the opening, and we will say we also require some closing stock to be kept. So we will arrive at how much is to be manufactured. For product B 6120. How much opening stock have they mentioned? For product A we are having opening stock of 550 units. For product B we are having opening stock of 350 units. Then for closing stock they are saying we need to maintain 5 days sales. So we need to calculate the 5-day sales value. So here in this period we are having 6 days into 4 weeks, so 24 days. So we will say, okay, this 4080 is for 24 days, how much is the 5-day sale? So 4080 divided by 24 into 5, 5-day sale will be 850 for product A, and 6120 divided by 24 into 5 will be 1275 for product B. So for product A 4080 minus we already have 550 in the opening stock, plus we require 850 as closing stock. So 4380 units have to be manufactured during the period. Likewise for product B 6120 minus 350 plus 1275. 7045 units have to be manufactured. Based on this, our entire calculation has to happen. Let's look at the solution. So the first and foremost thing we need to understand, as we discussed, how many units we need to manufacture. Once we know this, we will understand how much the material is required. So for product A to manufacture, we require 8.5 kgs of X. So 4830 into 8.5. Likewise for product B also we need 5.1 kgs for each unit. So we will understand how much of material X is required for A, how much of material X is required for manufacturing of B, and we will understand how much is the total requirement of material X, likewise for material Y. To this, we will add the opening stock, or rather we will add the closing stock requirement, deduct the opening stock that is already available. Now for closing stock also they are saying we need to maintain 10 days requirement and 5 days requirement. So that working we have done separately, and ultimately we have arrived at what is the quantity to be produced. Multiplied with the rate per kg, we get the total cost. So here what is the important starting point? We should be able to calculate how many units we have to manufacture. Once that is calculated, rest of the part is going to be simple. Now here in this question, the wages calculation, the number of hours required, I would rate it as medium to difficult, because there is some amount of trickiness involved. There is some amount of computation that we need to do. Let us understand carefully what has to be done here. See, we have calculated the number of units to be produced, 4380 and 7045. They have said the standard time is 5.1 hours for product A and 8.5 hours for product B. So we have multiplied and we have arrived at the total standard hours that is allowed. But they are saying efficiency ratio. So this represents only 85%. We need to find out the 100%. So we will divide the respective hours 22,338 and 59,883 by 85%. So we get 26,280 hours and 70,450 hours for productive time required. But this productive time, additionally we need to provide for non-productive downtime. They have said we need to provide for 15%. To this we have to add 15% of productive time. So 26,280 for product X plus 15%, and likewise 70,450 into 15%. When we do that, we get the total number of hours to be paid. So 30,222 for product X and 81,018 for product Y. Totally we get 1,11,240 hours. As we were discussing, how much is the time available with us? Time available is only 72,000 hours. So anything extra over and above that, which is 39,240, we need to pay overtime, and this overtime is going to be at a premium of 75%. So that is what they have done here. They have said 72,000 hours into 30 plus 39,000 at 52.5, which includes the overtime premium, and they have arrived at the wage budget of 42,20,100. So this is how this question has to be solved. So two things that we need to be careful about. One, computation of the production budget, and second, how they have given us information about the hours. Standard hours, provide for efficiency, arrive at the productive hours, add non-productive time, arrive at the total time, compare it with the time available, find out how much overtime is available, and then compute the total wage cost. Let's look at the next question. So this is more like a miscellaneous theory question. Let's quickly run through that. So 15A suggests the unit cost for the following industry. So you can expect these kind of questions for the theory question that we usually get, and each bit can carry about half mark to 1 mark. So what would be the cost unit for these type of industries? Transport, it can be per kilometer, it can be passenger kilometer, or it can be per passenger. So multiple units can be used. You can give 1 or 2 examples. Power, kilowatt hours can be used. Hotel, per guest day, per room day, per guest, and so on and so forth. Hospital, per treatment, per patient, per patient per day, per bed day. So many examples you have. Give any relevant one or two. Steel per ton, coal mining per ton or per quintal maybe. Professional services. So professional services can be per hour, it can be per job, it can be per contract. Gas per cubic feet. Engineering, again it can be maybe per job, or it can be per contract, or sometimes it can also be per hour of engineering time. Oil per liter, per ton, and so on and so forth. So these are some cost units which can be suggested. Discuss the difference between job costing and batch costing. While I am not going to go into the exact answer and stuff, but broadly, what is job costing? When we do the cost sheet preparation, cost accumulation and cost identification for each job. So for every job we open a job card and prepare a separate cost sheet. Then we are doing job costing. Each job is going to be different from each other. When we come to batch costing, units when units are produced in batches. For example, medicines we produce in certain number of batches. So that is when we use batch costing. Now the important point for batch costing is all the units are going to be homogeneous, and for every batch we are going to accumulate cost and cost records and cost information. Costing also is going to be done per batch. Next, explain what are the essential prerequisites for integrated accounting system. What is the meaning of integrated accounting system? We are going to maintain only one set of accounts that will have cost information also and which will have financial information also. So what are the prerequisites? The most important prerequisite is there should be complete clarity of what is to be recorded and what is not to be recorded, and there has to be coordination between the finance team and the costing team so as to understand and establish good practices and have clear transparency in the calculations that they are doing. Again, I am not going in detail about the answer, but I am just giving you an overview. Last, discuss the difference between cost control and cost reduction. Once the standard has been set, ensuring that we are incurring as per the budget or incurring as per the standard, it is cost control. There is a continuous effort to ensure that we are not spending more and we are spending as per the standard. That is called the cost control. But when we go for a permanent one-time reduction, earlier one unit was costing me 200 rupees. Now I have done some design changes and permanently reduced this cost to, let us say, 160 rupees. So this is a permanent reduction in cost that is going to be called as cost reduction. So there are other differences also which you can probably look at. But if I have to rate this overall RTP, I would say the questions included in the revision test paper for May 23 are not very difficult. Yes, one or two points here and there were tricky and required some assumptions, but by and large the questions were very simple and straightforward. Alright, let's look at the next question, which is from standard costing. XYZ Manufacturing Limited had prepared the following estimation for the month of January. So they have given us the raw material DF, raw material CE, what is the quantity, rate and amount. Likewise, they have given us the skilled labor in hours and the unskilled labor in hours along with the rate and amount. So these are all the standard quantities and the standard rates. Alright. The standard loss in the process was expected to be 10% of the total input materials. Let's understand what they are saying here. Now, how much is the standard input material? So, 1600 kg of material DF and 1200 kg of material CE. If we combine, we get 2800 kgs of input, but 10% is going to be the standard loss. So, 2800 minus 10% is 280. We get 2520 as the output. That means what? Whatever table they have indicated, this table is for a standard output of 2520 units. So the standard quantity of material required for 2520 units is 1600 kgs of material DF, 1200 kgs of material CE. Alright. And an idle time of 5% of expected labor hours was also estimated. Alright. At the end of the month, the following information has been collected from the cost accounting department. The company has produced 2960 kgs of finished product. Now you have to be very careful. The table that they have given is for 2520 units of output, but they have done 2960 kgs. So the standard quantity of material has to be extrapolated. For example, the standard quantity of raw material DF will now be 1600 kgs is required for 2520. How much is required for 2960? This is for material DF. So 1600 divided by 2520 into 2960. We get 1879.36 or simply 1879 kgs. Likewise, for CE, it will be 1200 is required for 2520 into 2960. So 1200 divided by 2520 into 2960, which is 1409.5 some change, or we can say 1410 approximately kg. So this is the standard quantity that you will have to compute for raw material DF and CE. Then they have given the actuals that has been used for DF, CE, skilled labor, unskilled labor, the rate and also the amount. You are required to calculate material cost variance. How do we calculate material cost variance? Standard cost minus the actual cost, which is nothing but standard quantity into standard price minus the actual quantity into actual price. So that is what we have to do. Simple, straightforward. Material price variance. The variance in the price, standard price minus actual price into actual quantity. Then mix and yield. So we will have to calculate something called as the revised standard quantity, and based on that revised standard quantity we will have to compare the revised standard quantity with the actual quantity, what is the mix variance and what is the yield variance. So this is a typical straightforward material variance calculations. Then they want us to calculate the labor cost variance, labor efficiency variance and the labor yield variance. They have not asked us for calculating the labor gang or the mix variance, but once you are calculating the yield variance, for that yield variance also you will have to calculate the revised standard hours. So anyways you will have to calculate the gang variance also, we can give that as well. So as far as the requirements in the question is concerned, it is simple and straightforward. There are no complications involved. But there is one thing which I want to draw your specific attention to. Now, as far as the raw material is concerned, we have understood what is to be done. But let us for a moment come to the skilled labors. See, we have understood that whatever is given in this table has been given for 2520 units. That means 2000 hours of skilled labor is required for 2520 units. How much are we going to require for 2960 units? We are going to require 2000 divided by 2520 into 2960, which is 2349 point some change hours. Likewise, for unskilled labor, it will be 1600 by 2520 into 2960. Into 2960, that will come to 1879 point some 36 or 37 hours. Alright, now have you understood till here? Okay, alright. Let's read one sentence which they have given in the question and see how we can incorporate that. Now they have said an idle labor time of 5% of expected hours was also estimated. Now my question is, this 5%, is it already included in this? They have given a standard for 2520. So if there is some idle time, we have to assume that it is already included in this. Alright. So case 1, we will assume that this idle time is already included in it. If it is included, then I don't have to do any further adjustment to this number and this number. Second, if we were to assume that no sir, this time that they have given us without idle time, we need to make a provision for idle time, then this 2349 I have to consider as 95%, find out 100%. So if I take an assumption that this idle time is not included, then I will have to extrapolate. Alright, so these are the two things that we need to do. So one of the assumptions we need to make and we need to arrive at the solution. But however, if you look at the solution that is provided by the institute in this RTP, they have taken none of the two assumptions. They have done something completely weird which does not make reasonable sense to me. But however, I am just highlighting that look, there are two assumptions possible. One assumption is that 5% is already included in the standard. If that is there, nothing else to be done. Second assumption, it is not included, we need to provide for it. That means this time that we have calculated represents 95%, we have to find out 100%. But what they have done altogether is they have said, oh, 2349 hours is the total, let us calculate 95% of this and reduce it. I really don't know what logical sense it makes, but then that is how the question has been solved in this RTP. When it comes to examination, you do either the first one or the second one. I am sure you are going to get reasonable marks with the assumption, because what the institute has done in the RTP does not make logical sense to me. But since they have done and since we are going to go through that, I am just bringing it to your attention. So what they have done is they have said this 2349, let us calculate only 95% of that. 5% they are completely ignoring, I don't know why. Alright. So what they are doing is 2349 into 0.95, they are saying skilled hours is 2232, and for unskilled they are saying 1879 into 95%, 1875. So they have done their calculation based on these two numbers, but it makes little sense to me. However, when you are doing the actual calculation, do as per either assumption 1 or assumption 2. Subject to this, rest of the question is simple and straightforward, and it is as we calculate our variances normally. So let me take you through that once. So 1879 and 1410, this is the material they have taken as standard quantity, which is okay. Rest of the calculations you can do it by yourself. Coming to the labor, see, this is what I was referring to. They have multiplied this by 0.95 and arrived at 2232 and 1875, whereas my understanding is it has to be either 2349 what we have calculated as per the standard table, or if you make an assumption that idle time is not included, add another 5% for it. But anyways, they have done what they have done. So subject to that, you can look at the question and understand how it is being solved. As far as the computation of variances is concerned, it is very simple and straightforward.